Hello. Thank you for joining us today. I am Laurie Syms, President and COO of Liberated Syndication. Joining me is also our CFO today, Richard Heyse, and we are pleased to be with you today. We could go to the next slide. Please take a look at our forward-looking statements, our standard disclosures. Also feel free to take a look at our SEC filings. Let's move on. We're here today to give you an overview of LSYN, where we fit in the industry and why we think we're well positioned going forward. To start, I wanted to take an opportunity to give you a little bit of background on the company. We are headquartered in Pittsburgh. We have two divisions, Liberated Syndication, which is our podcast hosting, and also our other sister subsidiary, Pair Networks, which is our web hosting. We will be focusing today on the podcast side of the business. Liberated Syndication was founded 16 years ago in 2004. We are a high availability, high reliable podcast hosting service. We are the largest paid podcast hosting service. And we were the first to bring a lot of the innovations that you hear today in the industry being touted, such as podcast apps, both for iOS and for Android, advertising, dynamic ad insertion, and also monetization through subscriptions. Let's move to the next slide. Just to give you a little bit of a background on where we fit into the industry, I'm sure that most of you know podcasting and have listened to podcasts. We do know that listenership has doubled over the last decade, as well as 50% of the U.S. population has listened to podcasts, so I'm sure you're aware of them. But a lot of the questions we get asked is where we fit in the industry and what the difference is between a company like LSYN, companies like Apple and Google and Spotify, and also companies like NPR or iHeartRadio, which are often referred to when talking about podcasting. So the content creators are those that actually produce the content, whether they're independent podcasters or companies like NPR or iHeartRadio, and also independents, as I mentioned, who are either hobbyists, small businesses, or larger organizations. So those are the content creators who produce that content. That content is then uploaded to a host, and that's what LSYN does. We provide a full platform of tools for hosting the hosting the podcast content and also distributing it out. We distribute it to places where it is consumed. So the 25 plus places that we distribute podcasts include aggregators, consumption apps, such as Apple, Spotify, Google, Stitcher. Those are the places that people go out and consume that content. So where LSYN sits is the hosting and tools segment. We do not produce content. We do offer tools for consumption, but we also facilitate distribution to 25 of those points. So our competitors in the space right now are listed there as examples: Podbean, Simplecast, Spreaker, Buzzsprout, and Blueberry. We can move to the next slide, please. I don't want to spend a lot of time on the history of the company. I would like to talk about where we're going. But as I mentioned, we have been one of the oldest and, as I said, the first paid podcast hosting company. We have a history of innovation, as I mentioned, really bringing to market a lot of the features that are talked about today in the industry. And right now what we're doing is taking advantage of that leadership and that focus of innovation and really turning that to a renewed focus going forward. We've been very fortunate to operate in the market where there is a lot of growth and also a lot of consolidation. According to Nielsen, we know that there has been a 20% compounded growth for the last 5 to 6 years. So it's predicted by 2023 that the actual audience for podcast listenership will double. So having said that, we're focused on adding more tools to the platform so that we can serve the broad base of podcast customers that we have. We are a podcast company for podcasters, and there isn't really one size-fits-all model for use cases across podcasting. So as I mentioned, the independents or hobbyists all the way up through celebrity podcasts, large organizations, they all have very different use cases. So we have a renewed focus on creating better tools. One of the efforts that is underway right now is a revamp of the LSYN UI and workflow in LSYN 5. And as we move forward, we will continue to add tools to support those podcasters. Let's move on to the next slide. So having said that, to really talk about the growth in the industry, in listenership, and the number of podcasts that are coming online today as people continue to create more content, repurpose content that they currently have in podcasting, our board of directors, along with management, undertook a strategic review of the company and concluded that we were going to move forward focused on organic growth and basically leveraging our position in the market, our long-standing history of innovation, and the proven strategy that we have for serving podcasters. So we continue to leverage our scale, innovate around the technology that we have, add better tools, make it easier for our users to use with LSYN 5 as we move forward. Next slide, please. To that end, LSYN grew about 15% year over year. As we reported in Q3, our show growth reached over 75,000 podcasts. The majority of that growth is with the LSYN 4 platform, which is the broad base of our independent podcasts. But we also saw an 8% growth in our LSYN Pro service. And in that service, we were able to add a number of celebrity podcasts across the network and also increase the LSYN Pro service. Moving forward to the next slide, this is just a smattering of the different types of content that we were able to add to the network in Q3. With over 75,000 podcasts, as I mentioned, we have a really good representative content across the various genres, across the various geographics, and also, as I said, the different use cases, so that independents or hobbyists can join the network, and we have tools for them to grow their audience and distribute to the places where they can attract audiences. And the same is true for some of the higher end podcasts that we have on the network, whether they be celebrity podcasts, whether they be business podcasts. We're providing those tools to allow them to reach the audiences that they want and to grow those. So if we can move on to the next slide. So this is an example of where we're seeing the majority of podcast downloads on our network from 2020 of September. We still see a strong pool on the Apple Podcasts ecosystem representing 64%, Spotify at just under 10%, and then some of the smaller aggregator apps, as we talked about before, around the 2%, with all others coming in at 19%. So it's important for us to be able to support the places that our podcasters want to be and where their audience can find them. If we could move to the next slide. And to that point, as I mentioned before, we have 25 distribution points ranging across the board from the large aggregators, as I mentioned, such as Apple, social media such as Facebook and Twitter, and also into various consumption apps, whether they be mobile apps for iOS or for Android, and those are listed there as well. So depending on the use case for the podcasting, whether they're a business or a hobbyist or a celebrity, they can make sure that they get the widest distribution so they can attract the audiences where they listen and are able to find their podcast. I would like to hand it over to Richard, who is our CFO, and he will talk about some of the metrics from the company for Q3. Richard?
Great, thanks, Laurie. First off, yes, as Laurie touched on earlier, just for the convention, the company is named LSYN, but we also have a LSYN business and a pair business. And this slide, shows the split in our revenues between those two subsidiaries. As Laurie mentioned, we continued in third quarter to grow. Our total revenue growth was about 5% year over year. The bulk of that growth, as Laurie mentioned, was driven by growth in our core podcast hosting business, LSYN 4, and was offset by a little bit lower advertising, but overall we continued the trend of quarterly growth in the third quarter. Want to go next slide, please? I think one of the things we like to touch on in the third quarter or help clarify, in the third quarter, our former CEO departed, and there were costs related to that departure. And so we had, if you look at our financials, our G&A costs appear to be very high. If you adjust for the costs related to our CEO's departure, that adjustment gets you to about a 1.9 million G&A amount for the quarter. If you look at the third quarter of 2019, likewise, there were some expenses related to a proxy contest. If you adjust for that, year over year, also you get the same number of 1.9 million. So our G&A costs of the third quarter were roughly the equivalent to the same adjusted costs last year. And we'd say generally that's probably a bit high. We have a couple other legal and other processes that are currently going on. So we would feel that 1.9 million is somewhat inflated because of some other factors. So if you look at our EPS and earnings, that was impacted by those one-time costs associated with our CEO's departure. Flip side, cash continue to be strong. We carry a pretty appreciable cash balance for a company of our size, and cash on hand was about $13.8 million, and we're in a net cash position overall as a company. Next slide, please. One of the other items that occurred in the third quarter, and a lot of it is driven by our CEO's departure, is we had a pretty significant decrease in our shares outstanding in the third quarter, a little bit over 8%. So with our CEO's departure, we purchased a little bit over 1.35 million shares from him at market price. And then also there was cancellation of restricted share awards for another 550,000 shares. Plus we had a set of share grants expire unvested to our directors. And the part of the proxy contest, there was an agreement last year to cancel 300,000 shares, and those shares were canceled in this third quarter. So net, our full share count went down about 8.1%. And that also continued in the fourth quarter. If you look at our Form 4 filings, we had some more additional share awards that expired unvested, and share count dropped about roughly another 400,000 shares in the fourth quarter. Next slide, thanks. So if you look kind of key highlights, as Laurie touched on, we're an industry leader in our position. We focus on paid podcast hosting and providing service to the top end podcasters, professional podcasters. We've been growing continually and adding to the base of our monthly subscribers. We have a very strong, old school financial profile. We're profitable. We pay taxes. We have strong positive cash flow, and we're growing. And we think that well positions us for expansion in the podcast industry. We're financially aligned. We have a solid customer base, and we've really aligned management and our board, as Laurie touched on, in our strategy to really focus our resources on growing the company organically and creating value for shareholders through organic growth. So with that, you want to go to the final slide, closing slide? With that, I think, Michael, if we'd like to turn it over to you for Q&A.
All right, and thanks again for your presentation. For those who want to ask a question, there is a little icon, a little bubble icon on the bottom of your right-hand viewer. Click on that to ask a question. So I have a few questions. I was just wondering if you were talking about how you're in the hosting, podcast hosting lane. I was just wondering if you're planning on moving outside of that hosting lane into other platforms, and maybe if you could just talk a little bit about your platform strategy for a little bit.
Yeah, absolutely. I think the core of the business really is, as you mentioned, podcast hosting tools. But we recognize, as I mentioned, that there isn't a one-size-fits-all solution. So the platform, as I said, is high reliability, high availability. We also offer monetization services and have through the premium subscriptions and also through advertising, albeit a smaller portion of our business currently. So yes, our platform focus moving forward is to expand those tools and to integrate them into the Libsyn 5 platform as we reorganize and make the workflow easier so that those tools are more readily available in the right places and easy to find and easy to use. So some examples of that we've done recently is an integration with Headliner. And so we will continue to work with partnerships to develop technology that will be integrated into the platform moving forward.
And, recently we've seen just a tremendous amount of consolidation. We've seen a lot of radio companies getting into the space. We've also seen, I think there's still, if I went online just to look, I think there's probably 55 companies that are in the podcast space. I think it's probably more than that because there's some very large ones that are not in there. Just in the ecosystem, as we look at the ecosystem, what is driving value to companies in the podcast space right now? What's making it, making them attractive in terms of consolidator or consolidate-T? So if you could just kind of give us a lay of the land in terms of what's the attraction to the consolidation in some of these companies like Stitcher and so forth that have been recently acquired.
Yeah, absolutely. And I know Richard would also like to chime in on this, but I'll add a few comments here and then I'll turn it over to him. I think, for us, it's a very strong position. As I said, we are a paid podcast host. We have over 75,000 podcasts. If you look at the consolidation, a lot of it is about bringing tools together to your point on a platform strategy or being able to serve kind of the soup and nuts tools that you need. A lot of acquisition is around hosting and being able to acquire hosts that have a number of podcasts and to grow content on specific networks. If you look at Spotify as an example, with the acquisition of Anchor, to get content. So some of it is a content play, some of it is a tools play. So we think in that space, because we have both of those, that we're well positioned moving forward. Richard?
I think the only thing I would add to that is in some cases, some of the players are trying to create, in essence, proprietary environments. And so they're putting together the entire kind of technology stack you need to do that. Where like with a LSYN, as Laurie pointed out earlier, we're hosting and distributing to all environments. And so there's been some of the valuation is driven just by the need of those players who are trying to create a proprietary stack to buy the tools they need.
Gotcha. And is that something that you'd like to migrate towards? I mean, is it you're trying to create your own ecosystem, or?
I think that yes and no. I mean, I think that if it's an ecosystem that is a closed system, we serve customers today that are not well suited for closed proprietary systems. So some of the use cases around, let's say, a Trader Joe's, who use the audio as kind of promotional to give color and tell stories about some of the products that they're bringing to market and to highlight that. Those are not well suited to being advertised or monetized. They serve to really further the mission of Trader Joe's. And so we have several like that. We also have some customers who use their podcasts to, again, market their own content. So whether they're in faith-based or if they're talking about entrepreneurs or mentorship around those, they use those to provide snippets of the content they provide as their mainstream business. And then they will use things like the advertising system to promote Obviously not now. They'll be promoting their online, but they will use it to geo-target and promote events around the country and around the world. Again, those are not applications that are well suited to, let's say, a Spotify environment. So, while we want to, we have, LibSyn Pro and tools that, are well versed for those types of higher end producers and an ecosystem, we think that the best way to go is to really serve all of those use cases and provide the tools for people going forward and not a closed wall system.
So we have quite a few questions coming in. So let's get to a few of these. Do you have any interest in M&A looking at technology and advertising, or will that be developed in-house?
Yeah, I think that we talked about that on the last two earnings calls. We have had in-house, well, first of all, as you know, we do have technology and ad stitching and dynamic ad insertion that is being used today by people on the network. Third-party ad sales for us is a small piece of the business. We have been developing ad technology in-house. And I think as we've stated along the way that we're always looking for partnerships or M&A opportunities where it will deliver value to our shareholders.
Okay, and then another question coming in here asking about color on the current stake that Chinese investors have and how the situation is evolving in relation to the dispute and the possibility of canceling their shares.
Okay, I'm gonna throw that one over to Richard.
Sure. I think, again, we in the fourth quarter filed a legal process related to some Chinese shareholders. Like any legal process, you really can't comment specifically to that. People are feel free to read the filings if they want, and we'll provide color in the fourth quarter in our like a legal disclosure. The one thing I would do with foreign press involved.
Okay, and then I have a couple of other questions here. They were wondering about, and this goes back to the peer network. So I know that you're focusing on your podcast hosting, but this viewer would like to know about the retention rate for our peer networks, and also will you drive up advertising revenue growth there? And when do you think that the lawsuit? Well, you just talked about the lawsuit, so why don't we just stop there for now?
Okay, I'm not sure I understand specifically the question on retention rate. I think maybe are they asking if we're going to retain the assets?
Well, it looked like customer retention, but let's talk about whether or not you retain the asset because,
okay.
Yeah.
Okay, got it. Yeah, so as we discussed in the third quarter, it is additive to the business. It's generating cash. We do have synergies there. I don't know how much, as far as customer growth, there are legacy services there as well where we have seen some shrinkage, but we're continuing to add customers. I think going forward, one of the areas that we can focus on are applications for small businesses and for podcasters for websites. So we are looking to grow the business, and we, as I said, as long as they're adding cash, which they are, we see it as additive. And it also represents, as Richard pointed out, a good portion of our revenue.
We also have a question on your capital allocation, debt, share repurchases, so forth, going forward.
Richard?
Sure. Yeah, I can touch that. I think, as we stated, our focus right now is organic growth. So our first primary use of cash is going to be invest in profitable growth. And, beyond that, we've had a really conservative balance sheet to date. So I think we'll continue being prudent in balance sheet management, but with a priority on, investing in profitable growth.
And, since we've talked a little bit about consolidation, I was wondering if you could talk about revenue multiples in the podcast hosting sector. And do you believe that in looking at many of your peers, and which are private, of course, are many of those profitable like you are?
Richard, do you want to take that one?
Sure. Again, we're really, as you noted, we're kind of a unique from a comp point of view. There aren't really any other public companies that are clean comps for us. And, generally, I think across the podcasting space, one of the things that people are challenged by is lack of profitability. There was just, some very specific comments made about some players in the space recently from Wall Street analysts commenting on their lack of making profitable headway in podcasting. They're spending a lot of money, but they're not really getting the results that people had expected. Where I think in LSYN's case, you can see our financials. We've been growing, steadily, and consistently, and so is our profitability. I think that does make us somewhat unique in the space, at least from, mine. I started in August, and we're looking around the space. There really isn't anything that we know of that's similar in a financial profile.
Yeah, and I think to add to that, it also gives us an opportunity because we are a paid hosting company, to focus on, as Richard said, profitable growth, and to be able to continue to leverage our financial positions to invest in, as we talked about, expansion of services, expansion of technology as we move forward.
So we're getting a couple of questions about advertising. They want to know what percent of your LSYN business revenues come from advertising, and with the podcast advertising growing very rapidly, what's the company's plan to grow that revenue stream?
I think it was, and Richard, can you correct me? I think it was 4% in the third quarter.
I think it's in that range, 4 to 5%.
Correct. Okay. So it currently is a small revenue stream for us, and in the third quarter we did talk about a decline in revenue attributable to some of the impact of COVID over 2020. But as we've stated, and we're not prepared to talk more fully about it, but we are investing in initiatives. As we said, we have technology initiatives that we've been investing in. We do also have, as I said, the ability on the network today for dynamic ad insertion and campaign management. So those are things we're focused on. We do see the opportunity. And we also see the opportunity to serve producers, those who are looking for monetization through advertising. So it is something we are focused on, and we're not prepared to really discuss more than that today.
Okay, because we did get another question about...
That's fine.
Yeah, about your ad revenue. It did mention in the question that your ad revenue has shrunk a little bit while the space is kind of exploding, and you talked about the innovation on the ad insertion side. So their question was, why not aggressively seek out this additional revenue stream?
Yeah, absolutely, and I think that, as we said, it is a stated goal of ours. We are looking at those. I think part of it is we are also making sure it's the right solution, not only to drive growth profitably going forward, and where we can invest in order to do that over the long term, but also making sure we're serving our customers and their requirements.
And in terms of the direct ad insertion for podcast, what is being done to to encourage people to move to that, to move to your platform?
Yeah, I should probably also elaborate. I was remiss in doing that. We do have, I was speaking more to the technology piece of that. What we're seeing today and more broadly in the market is we still have an overwhelming split of host-read ads, which is where the host will endorse the product into the episode itself. So it's not a third-party type of ad that you would hear read on the radio, like we're used to hearing for Geico or something like that. So those are really right now the most popular, and they're the most popular because they're easily measured. There's higher engagement when your producer or your host that you're listening to is endorsing that product, so those still remain very popular. And I think the other thing to remember is there also is a difference between the technology of dynamic ad insertion. So to give you a little color around that, for those producers who, as I said, are evangelists or are doing tours around the country for comedy or books or whatever mentoring or coaching that they're doing, they use dynamic ad insertion to rep their own events. So as they have events going around the country, they'll geo-target New York or Pittsburgh or Florida, to let people in those areas know that they will be there. So that part is the technology part. And there's a difference between even their host-read ads being dynamically inserted and what's known as, third-party read ads, think radio ads or programmatic ads. So I just wanted to make that distinction as well. That most of that revenue today for us, that 4% does come from host-read ads, but we also do have the technology that is being used on the network for dynamic insertion.
Great. And when will the LibSyn version 5 rollout be to all participants?
So today it is open to anyone who wants to participate. We are calling it preview. So as we roll those out, anyone who would like to participate, we launched a beta community and a formal beta community now. So anybody who is on the network that would like to participate, please contact us. support@libsyn.com, and we'll be happy to point you in the right direction. And we will be doing more of a public beta here in the first quarter. And that will, anybody who would, signs up can have that availability.
And can you comment on cost savings going forward? What you had touched on that a little bit in your presentation, but can you talk about that a little bit more detail?
Sure. I mean, I think through this last year, there's been, again, our CEO's departure, and there was a whole process. We had a board proxy contest. And I think the biggest thing we would point to around cost control is just that our legal expenses should be coming down with time. On the other hand, we've said we need to invest in our R&D spending, our technology spending. So we would expect on one hand to have better control of our overhead, while on the other hand, investing in our technology platform and increasing spending around building features for supporting customers.
And Richard, I think there might have been a little glitch in terms when you were explaining about the Chinese investors. It looked like the Wi-Fi kind of was a little slow there for a second. So we did get a repeat of a question about the Chinese investors. And, can you just describe what stake they have?
Okay. So this maybe I'll take a few seconds, and this goes back to LibSyn was dividended out of a previous parent, and there were some shareholders in that parent who also got LibSyn shares, and we filed a lawsuit in Denver federal court around Thanksgiving that relates to how they acquired their shares initially, and detailing some specific concerns about those shares and seeking some relief from the federal courts. And so, as I mentioned, that process, any legal process, your company, you can't really comment to it. There have been some articles written on the specific our filings in the lawsuit. I would suggest go read those articles. And any legal process like that, those federal legal processes take time. So I will be working that process and moving it through the courts as fast as reasonable. But those things, these kind of lawsuits take years, not months.
And do you have any IP or other barriers of entry for competitors in the space?
I can take that one. So yes, we do have a lot of the things that we have developed is proprietary. So we each have all of the people who are participating in the IAB V2 have their own implementation, but it's pretty standard. So I wouldn't call that IP. I think that the integrations and the distribution that we have, it makes it very easy for us to add those into the platform. And of course, as we move forward with our advertising initiatives, those will be proprietary as well. But part and parcel to podcasting in general, it is meant to be an open platform with broad and wide distribution to attract audiences. But we have done a lot of work because we are a high availability, a high reliability service on our infrastructure, and I believe that gives us an edge as well.
It sounds like investors are really excited about the advertising opportunity. They were they're asking about the the prospect of ad revenue being a prospect of having a good strong sales team. Do you have anyone dedicated exclusively to selling ads at this point?
Today, I think as we've mentioned in previous in our filings and in previous discussions, we do have a small ad ops team. Today, we also are leveraging the relationships that we currently have. We are attracting new advertisers. We do not have a sales team, a large sales team or an international or domestic sales team at this point, as that business, again, has been a smaller portion, but we do understand what we need to do to move forward. So.
And what are the capital spending plans? I mean, in terms of what is your budget in terms of capital spending? And then can you just talk about whether or not that's just trying to keep up on the technology or if there is actually some investment spend, and if you can just break those two out for us.
I'm going to let Richard take that one, and I can add some color.
I think as far as capital spending, as far as physical hardware and infrastructure, it's relatively modest. I mean, as with time, servers have gotten cheaper and cheaper, and we run our own data centers. And that's part of the reliability and security we provide. For the LSYN 5 development, software development, that's really where our more the expense is, and that's really developer costs and having developers to write the code. And that's something where I mentioned, we intend to, increase and amplify our efforts around, developing features in our code, and we would expect that, part of that is going to be hiring more development staff.
And I think just the other investment around the areas that we're talking about as far as adding tools and features across, the workflow of producers as they create and distribute and promote. There will be investment in those areas too as we bring those features forward.
Can we go back to the pair network for a little bit?
Sure.
Obviously a fairly crowded space. Can you just talk a little bit about your legacy part of that business and what you're seeing in terms of opportunities? Or are you thinking that this might be just something that the company is just going to de-emphasize, maybe eventually sell? Can you just kind of give us a little bit more color in your thoughts?
Yeah, I think that there is a legacy part of the business, but we're also focusing on growing the areas that are not legacy. So we had smaller portions, I shouldn't say smaller portions, we have legacy portions of the shared hosting business there, and those have, we've had losses there as it's just a natural progression as people move off those services or as they don't need them anymore. But we're also seeing growth in the new shared services as well. So that was a very large customer base for us. But we're seeing growth in other areas of the company, such as WordPress. That's been a focus for us, and VPS. So those are the areas that we are focused on. And I think that, as we continue to grow shared services in the non-legacy bucket, we're going to see more forward motion there. It is a crowded space, but we believe that we have a competitive advantage in really the care and feeding. So our security services there and some of the business add-ons that you can do for both shared and WordPress services at Pair Networks. But what people don't realize is that a lot of the worry that one faces in hosting as far as updates and security and those types of things we handle for those customers. So it's a pretty comprehensive service that we do on the system side.
And a couple other questions here. What are your marketing plans going forward? This viewer is suggesting that he's seen competitor ads on Google search and so forth. Any thoughts?
Yeah, absolutely. I think that, we had in 2019 really made a pivot as to the types of marketing that we had been doing. And we were glad that we did because 2020 proved for us to be very abnormal as far as attending conferences, building those communities that we were used to meeting at conferences one-on-one. We were able to continue to have engagement and community activity online as almost all of those conferences moved to digital venues. But, I think as we've seen, it's not the same as being face-to-face or one-to-one. So we have ramped up our digital marketing. We've also begun content creation, marketing, as well as you should be seeing some ads pop up there as you're navigating around. So if you haven't, you should be seeing them soon.
I think we're only going to have time for one more question. So this question here is about the company moving over to the NASDAQ, and they want to know your interest in doing that, the processes, and what you need to have, what needs to happen for that to move forward.
Yeah, I'll throw that to Richard, but we aspire to do that, and we've talked about that on our earnings call. But Richard, do you want to add?
Sure. I think as we've said before, we're definitely interested, aspire to move up to NASDAQ. I've taken a company public on NASDAQ before, and as we said in our third quarter filing, at this point we're simply, we think we have improvements in our internal control environment that we should make. We're working on those improvements. We've got resources in place, and when we feel that we're in a better space around, improving the overall control environment, we'll definitely consider uplisting. We meet all the requirements at that point. It's not a matter of qualifying. It's a matter of feeling that we're in the right position and we're ready to go.
Well, with that, it's been a great pleasure to have you on. I really appreciate you participating in our conference. Fascinating story, and I look forward to monitoring your developments. Thank you.
Okay, thank you.